What's cracking, good people? Peloton just can't catch a break. First, the CEO bails. They lay off 50% of their staff, and now the stock is a roller coaster. But what does that mean for your money? Let's cut through the hype and get straight to the numbers to tell that real story. I'm not just about predicting stock prices. I'm all about looking at the cold hard facts behind those headlines and figuring out the long-term play. I think Peloton is a perfect case study. The long and short of it is the homie Barry McCarthy has decided to step down. Yeah, whatever that means. After only being on the job for about 2 years, it was no surprise to me because they brought him in to cut costs and to help return the company to growth. But the financials were saying something different. One thing I find interesting about the whole debacle was that they're gonna have 2 board members step up and be joint CEOs. Like, I've never seen the joint CEO thing go right. I think back with BlackBerry before they went out of business, they had 2 CEOs. And I think if you guys are Succession fans like I am, you can see how it went with the Roy brothers when they tried to do the whole joint CEO thing. Like, it never works. Dual CEOs or not, this wasn't a total shock for me because they lost 2.8 billion net last year. And this is exactly why I do not chase hype stocks, and I encourage you guys not to do it either. Like, you can look at that and you're like, how did they lose 2.8 billion if you look at these sales? Because sales kept growing, I mean, only by 6%. That's a huge slowdown from the pandemic times when everybody was like, this is gonna be the next great thing. People aren't going back to the gyms. We're all gonna have Pelotons. We're gonna plug them right into us like umbilical cords and do everything from that bike with those instructors. Like, I was sitting back like, this does not feel sustainable. So I dipped into the financials and you can see that they're just burning through cash like crazy. Like, literally, they spent 660 million just operating that core business last year. And that's just a recipe for disaster. So anybody with half a brain could have seen these layoffs coming if you're actually looking at the right data and not just chasing the news. Like, for example, after they announced that this CEO stepped down, the stock went up. I think that's just because investors are like, it can't really get any worse. And that's like a emotional move in the stock play. So if you're inexperienced and you like to follow crowds, you'd be like, Peloton went up, the CEO decided to step down. Maybe this is my chance to jump in and invest because I believe in the company. I don't know why you would believe in them, looking at those numbers I just talked about, but hey, you might. But this is why it's important to dive into the real data in the financial numbers and not just chase the hype. But over to you guys. Let me know how you're feeling. Are you getting FOMO and thinking about buying the dip about Peloton? Or did you have that gut feeling like me that felt like something was a little bit off when you seen it rise up during the pandemic? And if you've been tracking, seeing that actual revenue start to dip lower and lower while the cash burn raised up. So hit the comments and let me know. Let's go a little bit deeper on this. Was the news a surprise to you, or did you see it coming? We dive deep into topics like this because I'm all about breaking that generational wealth curse so you can leave more behind for your family than just debt when you die. Until next time, it's your boy Michael T. Ragland. I am out. Peace.